So the market's pulled back a little bit today. We see a lot of stocks in AI sell off. You see AMD down, Tesla is down. You got Big Bear AI is down about 5%. And we kind of did a breakdown here too because we got CTM stock that we were trading this morning. Now CTM, we had a stop there. Let's see where it was. We bought at 142 and we had a stop at 139. And so we ended up selling out of CTM on the short term and continuing to hold our long-term positions. It didn't fully break pattern. As you can see, it's still trending upward. What's going on with the market? Couple things. The first thing is we had a new potentially good tariff deal between the US and China that came out. But then you have the news of the Federal Reserve that's been stirring things up with Powell and uncertainty and with his position changing and things like that. And then, of course, while that's happening, you have all these articles that come out. Let me just look at some of the articles from today, and no fault to just one channel or anything, just in general, right? You have this is the stock you're going to retire on. You have this is the 100x stock. You have this is not just going to 100x, but 10x undervalued. Here's another one that says this tiny stock might be the buy of a lifetime, and it says buy this stock. There's another one that says buy alerts, and it says $8. Buy this $8 stock with a video saying to buy Big Bear AI. And again, we've been kind of saying it's due for a pullback. Most likely it's going to sell off. So I don't say this to throw any shade on any of the other creators. I love to see that there's people covering companies. It's good for the companies, but it's good for the people that are looking for good opportunities, if that's in fact what they are. But just be careful. There's a lot of hype. We've seen the market push up drastically. We were expecting a pullback in the market, and that's exactly what we got. Looks like there's some companies that were still holding SPY positive. We do have a big week this week as we got earnings coming out for we got our targets released in StockMate. If you ever want them, the second link in the description. But we have Tesla this week along with Alphabet and IBM. And then you have earlier today, you got Verizon, Lockheed Martin's tomorrow pre-market. And so we're going to be watching these earnings this week. Now, CTM stock, there is more, confidence that there will be more contracts related to defense companies in the near term. And CTM works in defense. We've seen them build this market cap really from about 70 million when we started covering them up to what is now about 120 million or somewhere in there. And we're looking for them to continue this trend. They did pull back down. We'll see if it bounces at this previous resistance level that's been rising. If it bounces, then maybe we get that move back up into this range up here. It'd be about a 25-30% increase. We were trying to see if it would rally up here, about a 56% increase, but it just sold down and there's a support there. If the market continues to sell off, we could see it sell down as low as 20% more, down to that $1.10, $1.20 range in here, which wouldn't be crazy. But that's why we manage risk today. Portfolio's down about 2.4%, which is fine. We're up very much on the last few months. Some of our positions have pulled back, but we're doing quite well over the last few months. Now, when we're looking at Castellum, there was just one thing I wanted to mention. There's some great conversations. I talk about it a lot, but some of the best insights in the channel don't come from me. They come from you. They come from investors that are deep in different stocks, and whether it's on YouTube or it's in StockMate, which there's been some really great insights on different companies here. If you ever want those, again, the second link below. But there was this interesting thoughts I had with Danny. We were on the phone. He's a consulting client of mine. And we were talking about how Castellum Inc., they got a $100 million contract, which was great. It was bigger than that of their market cap at the time. And in that process, they got a naval air systems contract, which is where the CEO previously used to work. So when you have a CEO go out, Glenn Ives in this case, who was previously in the Navy, go get a contract from Naval Air Systems that's in that $100 million range. It's great. It's good for the balance sheet. They reduce their debt. So from a financial perspective, we see them hold revenues and we see their quarterly total assets increasing with reducing their debt, which is good. But the thing that Danny and I were talking about was, what if it's like one of those situations where the CEO goes and gets this deal with the Navy? Um, okay, you can go back to your previous place of work and secure a great contract, but where do we go from here? Are there more contracts that can be secured? Is it only going to be on the prior place that the CEO worked? Can we have some more deals start to come out related to defense that are going to expand outside the horizons of where the CEO previously worked? Because that's a really good thing to look at, I think, to show signs of growth, not just that they secure it with this new CEO, they get this contract, and then now what? So it's good, they're growing, but we do want to see them still roll in new contracts, as they've had some public offerings and things like that, but they haven't secured a contract in a little while. I think it's been maybe since, yeah, that was the last contract they got. It was back in February, and we just want to see some more contracts grow with this company. Otherwise, the financials might just kind of taper off or something. So we want to see those kind of continue to grow. Now, the other thing about Castellum is we see the pullbacks kind of take place. They are working on machine learning, so that might be something where they find more contracts. If they do have a greater market pullback influence that we've seen here, we could see them break this level and maybe even sell back down to that dollar a share range. Wouldn't be crazy, but we're just kind of watching, see if they hold this uptrend here and can recover and find that resistance as a support. We aren't in any short-term positions. We were this morning, and then we managed risk. We bought basically right here at 141 right here, or 142, and we sold at 39 right here. So very short amount of stop loss there. We're very close, because I just wasn't sure if the market was starting off kind of slow, or like maybe the market's about to pull back, and that's exactly what happened. So when we're watching CTM, we got to watch this level, look for this bounce. If not, be ready that it could potentially sell down some more. The institutions can move this one very easily, so it's only $100 million market cap, so we could see it move very fast up or down. So I'd urge caution for any of you guys maybe looking at buying the dip. Just keep in mind that movement can move very quickly, and it's important to have a plan on the short term. Like, for example, we did today inside of StockMate. We were trading live. Last week, we won a trade almost every single day. And it wasn't like a day trade, but it was like over the course of the week, we won at least 5 trades. APLD, Big Bear AI, 2 trades on Big Bear AI. Rigetti, we were in Redwire as well, which we sold out of Redwire this morning. I ended up selling Redwire right at market open, which ended up being a really nice sell. So we had bought Redwire around like $16 a share, and we had sold it. So Redwire then continued to sell off. So this is the trade we made. We had bought it right here. No, we had bought it lower. We had bought it down here around $16, $17 a share. We rode it up to $20, which was a 10% profit. So we invested about $9,000 or so. We made $1,000, and we said this morning, all right, let's lock in our $9,000 right here around market open. Continued to sell down about 10%, 11% actually, because it was up 1% when we sold it, and continued to sell back down. So, the market's correcting. It's not breaking pattern per se, but we do see some pretty big corrections. So that's why it's so important to have that plan in the short term. And then for those of you guys investing in the long term, these are the types of moments that oftentimes, people get scared. Most investors will, but the best investors get excited when you see more red. So that's kind of how we do it. We love to see red at market open. In fact, that can, cause a lot of great rebounds. And that's why we look forward to seeing it. And it means you could serve those sellers that are looking to get out. You could serve them. You can be there on the other side, take the shares, and potentially see that recovery if you're in an institutional attracting opportunity. So institutionally attractive opportunity. So guys, thanks so much for tuning in. If you earn the thumbs up, if I earn the thumbs up, hit the like button. Comment your thoughts on CTM below. And again, if you want to join us in the daily live trading sessions, we got lifetime access. I'll send you a free t-shirt anywhere in the world, and I'll give you a personal phone call in the second link in the description. Thanks so much for joining, and I'll see you guys in the next video. Take care.